Hey everyone, Dan here. We are during Power Hour on Tuesday, June 8th. Today we're going to take a look at CCIV. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And let's jump right in. So here's CCIV on the 6-month, 4-hour chart. And I just wanted to zoom out so we could get a better idea of where we are in the vast scheme of things. If you notice, there was a huge chunk of sort of price activity that took place in this region. It was sort of like this battle for up or down or up or down. Obviously, it had this ridiculous run, if you remember those days, and people were buying as it was running well over 60, and then just the dramatic fall from there. But lots of price activity in this region. Can probably draw this down a little bit, but I would look for potentially some volume to start running us up into this region pretty soon, because this just begins, around mid 27s and then lifts all the way up into the mid 30s. So say 27.5 to 35.5, there's a ton of buying and selling activity, historically speaking, in that region. So I wouldn't be surprised if we sort of like work ourselves into that area soon. And that's not just because, we're close to $27 right now. It's because there's so much historical buying and selling happening there. And so as we approach it, I think that I'm not just saying, hey, I think we'll be to 27 soon. I'm saying I think we'll start to bounce around from like high 20s to mid 30s. And potentially that'll be sort of like the new trading space in which CCIV sort of settles in for a little bit of time. That might take closer to the merger hype to get going, sort of like you saw with IPOE and SoFi and the stuff that picked up there. But I do think that that's about where we'll end up in the medium term. If we wanted to look for some sort of price targets based on all of this historical activity, I do think we have really strong support there at this 24.23 level. And so to the extent that it's needed, if it dips a couple of dollars, I would expect a strong bounce there. Additionally, this area right here, right about where it is, I guess, 26.51 should provide either like very, very immediate, like at this moment, immediate support or resistance. So best case scenario, it gets support there and is then able to make a run toward the next price target, which is a pretty decent lift, I think. Something here close to the $30 range. So that could be a nice 10% or so run for it to go on, just to reach basically the next area of buying and selling pressure. But if it can't get support at that level, not at that level, at this 26.51 level, then it may come down and may want to test that $25-ish level again, or that mid 24 level before it runs up again. But it is basically encompassing or engulfing itself in this pretty decent like uptrend here. So if it can flesh this out and sort of build itself a bit of an up channel here, that would be great. So it would just mean that at the moment it's toward the top of that up channel, but there's a lot to do to sort of like stretch and rejigger this channel if it's going to develop over time. But those are the immediate price targets that I'd look for. If you need another catch zone to the downside, if you're like, hey, I'm happy to be a bit more tolerant or liberal with my downside exposure, I'd look for bounce zones, which you could then interpret as potential cut loss zones right there in the mid 22s, and then right there in the like high 20s, a bit below 21. That's what I look for on the downside. On the upside, you have this, near 30 price targets, and then I think you have a really solid zone here, just shy of 33, and then obviously right around here, low 35s, and then it's going to be a little bit of the Wild West. Hopefully at that point there's like a channel that's forming, or some trend line or some wedges or flags that are forming in order to sort of like better inform the from the trend perspective, at least the charting perspective, where the price might be going, because relying on this isn't probably going to give us a ton of clear indication of where the price might hit support and resistance zones. And I've been saying this a lot in my videos recently, but just remember, when I chart these upper positions, this isn't just to say that you should be looking for potential like take profit area there. What you could be looking for is, say you want to buy into much clearer strength than CCIV has shown right now. So even though it's run from this like $17 mark up to this like $26, $27 mark, because it's been beaten down so much, maybe you're sort of thinking, no, I want to see even more recovery before I'm going to take a position in here, or more recovery before I'm going to increase the position that I already have in CCIV, because I just sort of like don't trust it anymore, and that's fine, that's fair. So maybe you say, okay, if it can really get support at that 29.93 zone, then I would feel pretty confident in my position. So maybe you see it run up over that 29 level, right? So maybe it comes up and it gets there. So it comes up to about $32, and then it pulls back. What you want to be looking for in that pullback is that it pulls back into that $30 area, which should be ripe for a bounce zone at that point. It should hold up really well if the price gets down toward that position. So what you could do is start, start averaging in your position around, 30.50, something like that, and then sort of like see what it does at 29.93. And if it breaches 29.93 and drops maybe like 1 ATR below it, then maybe you say, forget it, I'm going to stop loss out then. And I risked a little bit and lost a little bit, but nothing catastrophic happened. But that's one way that you can play these upper zones, is to not just say, I want to take profit at them, but I can use them as upper price targets to buy into with shows of strength in the stock price. So that's what I'm going to look for on that. In terms of where we are on the longer term indicators, the MAs, oops, sorry, I meant to delete all of these to clear our charts a bit. Okay, so MAs in this longer time frame, this 4-hour chart is showing pretty bullish strength, lots of real estate between the 20 and the 50. And remember, these MAs should provide additional areas of support. You can also play bounce zones off of the MAs if you see like historical precedents for them. So for example, you see it held and bounced really well off the 50 here, the yellow line, and you see that it did basically the same thing here. It got support on there and then had a nice run up from that area. It came down and it tried to catch it for a few candles here, but it just couldn't hold and dropped below and into a bearish formation. But you see it came back here, regained support on that 50, and then if you had basically said, I'm going to take a position once it's over the 50 MA, and then I'm not going to sell it until it dips below the 50 MA, you still would be in this trade. You would have taken that probably around $18, $19. So that's another way to trade it, but it looks like the 20's been doing a good job holding it since about, I guess really since about here. The 20's been holding it, did dip below it a little bit, but then, the 50 caught it so quickly that the 20's been bolstering it up ever since. So this is just a long way to say, that 20 MA is at 24.73 right now, and the 50 MA is at 22.16. Those should both offer additional support should the price dip down. That's above and beyond the supply and demand zones that I charted with the blue lines a moment ago. So keep an eye on those. And then let's just take a look quickly at the RSIs. Very high even on the longer time frame, so nearly overbought in the longer time frame. It's done a really good job holding the mid-range as the low point since it had this first run up into overbought territory, and then came back just below the mid-range and then has run up into overbought a couple of times since. So if you do dip down, you may see a dip down into the 50s or even high 40s, but it may not need to come all the way down into oversold territory in order to get the buying pressure back to make another run toward overbought on the RSI. On the MACD side of things, you see it's coming down here potentially for a bearish crossover with the MACD crossing below the signal line. You see on the histogram a little bit of the momentum dying down. So that wouldn't be a huge shocker. It wouldn't be a bad thing from this huge run here to take a little breath which it is right now, but you know, a little breath, come down, give folks a dip buy, make sure it doesn't sort of get overextended. And when they do get overextended, they have a tendency to do this sort of like sad face thing where it has this huge run up and then just comes all the way back down again. So if we don't want it to do that, one of the ways that can prevent it, this is not 100% of the time thing, but one thing that helps is that it takes breaths along the way. It doesn't just go parabolic and then parabolically back down. So that's what I'll be looking for from the MACD. Could be signaling potential dip buy opportunity coming up. But it might be in the very, very near term. Like, it wouldn't shock me if it was somewhere around here in the 25 to 2560-ish range. So that wouldn't give it a ton of space to have to go in order to get there. If we want to take a quick look on a shorter term time frame, if you are doing like intraday trading on this or short term swing trades, you know, obviously there is, looks like a bit of a channel here that you could probably be playing. Yeah. And we'll take a more conservative look here. Yeah, so we're about mid-range on the channel right now, but you could look for, you know, a dip buy on the lower area of the channel there. If it comes down, you know, something right about here. Tomorrow, I guess we could stretch it there if it's in the morning hours, right? But you know, high 25s to low to mid 26s, probably not so far from where it is right now actually, but that could give you an opportunity there, and then have channel support at the bottom. So there's all these different areas of support. There's the MAs, there's the supply and demand zones, and there's, you know, channel if a channel is there. But channel is one of my favorite things to play. That you might know that if you've been watching for a little while. But you know, that's what I would look for. Is for this channel to continue to hold, and you could just basically continue to buy dips toward the bottom of the channel, take profit at the top if you want, or continue to hold and just average back into it as it drops toward the bottom again. Ruckus going on upstairs, but we'll just keep on trucking. So on the indicator side of things, we'll just take a look at the RSI, just a little bit above mid-range right now, so sort of like no significant buying or selling pressure. You do see a bearish crossing here, kind of, but it's flattening out a little bit. So it's almost more like a little bit of a smooch, a little bit of a kiss with the MACD and the signal line here. Obviously above the baseline at the moment, but we'll see if it provides that near bottom of the channel dip tomorrow, or if it continues its way up and maybe breaks out of the channel again like we saw here. All right, well, good luck. If you're in CCIV, congrats if you held through all of the pain that you've endured. I don't know if congrats is the right word, but you know, I'm sure you're at least feeling a little bit relieved that it's not in the single digits as a stock price. But I know it's been a tough go for people who've been with this one for a long time. But in any case, I hope that this video gave you some ideas, and I certainly appreciate you watching. All right, I will see you in the next video.